Terry, I'll put the same question to you. As we finish out the final weeks of 2019, higher or lower from here?
You know, I don't think that we need to make bets. We're advising against making big bets one way or the other. There's just too much uncertainty that's still out there that's binary. So we don't know what's going to happen with trade. It could go in either direction. We don't know what's happening on Capitol Hill. There's still too much uncertainty, I think, out there to make a big bet one way or the other. So we're just sort of towing the line in this environment, which I think, you know, to Mike's point, there's still a lot of under the surface stuff going on that doesn't support too much of a rally going forward.
But what does towing the line mean? How should investors be positioned in this market right now?
Well, we want to keep, we're keeping airbags essentially in the car. We want to make sure that we have trailing stops under everything that we own. We're fully invested. We're not taking a lot of chips off the table, but we're not also going to put a lot of money into risk on right now, just because I don't think you're getting paid for that risk in the markets that we see. And so just staying more neutral in portfolios, a little bit boring, but sometimes doing boring well is what we're good at. So that's where we're sitting right now.
Barb, the bulls still argue going into year end that everyone's postured defensively, right? And there will be a chase in December. What's wrong with that thesis?
Well, I think the fact is people are positioned defensively, which is a good thing, you know, in terms of the market continuing to move higher, because people have made money, they've done well this fall, but now we're like, I think it's interesting that biotech was up 8 weeks in a row. That to me is a risk on trade. And so that says that there's a little bit of animal spirits there, very little, you know, and all we need is some positive news on trade, and it will probably be some very weekend. We're not doing anything more right now. And I think it provides an underpinning to the market, because the earnings that we're looking for next year, we're not going to see till next year. So we're done with this, you know, pretty much earnings season. So
I think there's some nuance to the positioning question, whether people are defensive or not. The shorter-term tactical people who are always in the market or always looking for the next trade, they got overexcited, right? If you look at the kind of options traders and the people who are very tactical, I definitely think that they were racing it into the highs. Now, longer-term money, long-short hedge funds still seem very lightly exposed to stocks and not really positioned. Maybe that's why the dips have been so shallow in the last couple of weeks.